Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside, currently working on wave 4 or wave 4 already in, something we'll discuss on the lower time frames in a second. But after 4 we do want to see a wave 5 to the upside impulsively, where an interesting area is that 50k area. Now, as I can imagine, many people are looking at this psychological number. What I would like to see is this wave 5 to end below 50k or above 50k. Below 50k so that the people that are looking to short 50k are missing out and have to short later, and above 50k because we then get extra liquidity, as people might FOMO because they think all-time highs, so buy, but instead that liquidity is then used for bigger positions to fill their short orders towards the downside to then correct this impulse towards the upside over here. Now, the most common target area for wave 4 is between the 0.236 and the 0.5, taken from the low of 2 to the high of wave 3, giving us a target between 40.3k and 35.3k, with the invalidation being the 0.618 at 33.1k. You can also see the vertical lines on my chart, and these are fib times taken from the high of 1 to the low of 2 and then put on top of the high of wave 3. To compare wave 2 in time with wave 4 in time. Now, commonly in Elliott waves in an impulsive structure, wave 4 is longer than wave 2 in time, which is also the case over here, wave 4 being longer than wave 2. However, we also don't want the wave 4 to be too long, because then it's getting out of context and we have to think about other scenarios. So on the chart, you can see a 3 fib time, which is still fine for wave 4. A 4 fib time, that's also still okay, but we got to start thinking about other scenarios, and a 5 is quite rare, that a wave 4 is 5 times longer in time than a wave 2. The 3 fib time is where we are at the moment, Saturday the 23rd of December, 4 fib time 29th of December, and the 5 fib time is on the 4th of January. The bearish but eventually bullish scenario is that we have a high in over here and then a potential second wave 1, looking then for a bigger dip towards the downside in 2 for then continuation in a much bigger wave 3. Main reasons to think about this being then another 1-2 continuation is because so far the structure we have over here does not look impulsive to the downside. This looks corrective, so on the medium time frame we are still looking for higher prices to come and these highs to be taken. For a wave 2, the fibs are taken from the low to the high of the green wave 1, giving us a most common target area between the 0.5 and the 0.786, which is between 34.8k and 29.1k. And an important area of support inside that area is this white box over here and the value area low. The white box, as you can see, is right on top of the golden pocket that we have at the moment, 32.4k to 31.6k, and then the value area low at 30.6k. And if you're thinking, what are these lines? These are lines and the support resistance area of this volume profile here of 2021. The value area low, the point of control, and the value area high, with the white box being an important support resistance area. If we then zoom into the range that we've been in for a while now, then one of the scenarios here, the bearish scenario, is a WXY, where the high of X preferably is already in after a potential flat or double zigzag structure, and we are now looking for a wave Y to the downside. Because wave W is an ABC flat labeled in this particular scenario, wave Y can also be either a flat, a zigzag, or a triangle, and we don't yet have enough information for what the pattern then will be for a wave Y, but we do know the target area for a wave Y, which is between 41.5k and 38.7k, and in this area we do have here at the bottom some interesting support, the golden box between 38.6k and 39k, and on the way down we also have other areas of support. Over here we have the value area low, a daily, but then interesting around 41k. We have a daily and a daily naked point of control as well for some additional support. In this second scenario, we are looking still for a little bit more upside before we then get an impulsive move to the downside, because in an ABC expanding flat, we're looking for wave C to be a 1, 2, 3, 4, 5 wave move towards the downside. The main difference between the WXY scenario and the ABC is actually the pivot of wave A, which is this one here on the right instead of the one on the left. And the reason I put wave A on this pivot on the right over here instead of this one on the left is because if I put it here, you get a internal potential flat structure and then a wave A, B, C, with C being then a 5-wave move, but a flat ABC inside a bigger wave B and then a wave A, B, C has low probabilities and therefore is not preferred. So if we are looking for a flat, I'm looking for here a wave A, then we have a W looking for an X and a Y, and then potentially a double zigzag to the upside where W is already finished. Currently we are then working on wave X, where the 382 to the golden pocket is always a common target for a wave X as well, which is between 42.8k and 41.8k, and preferably candles stay above the 0.5 or 0.7 fib over here, which is sitting at 41.6k, and then price returns back towards the upside, and then another zigzag structure for Y, and then a double zigzag WXY inside wave B. Most common target for wave B in an expanding flat is between the 1.236 and the 1.38, which is between 45.4k and 46k, which is also right on top of the golden resistance we have here, sitting between 45.2k and 46k. I do want to show you two scenarios that are lower probability, and I explained these two in the previous video in more detail, and I just want to say why they are lower probability in this video. First of all, the diagonal here, where wave 3 is longer than wave 1 and then a potential contracting diagonal, which is not common. It does not invalidate a diagonal, it's simply not common. However, in this scenario we would also preferably expect a move down, find support and a move up. So the way that price action is moving here would be quite similar to the scenario that I've just shown, which is this one over here, where you then also look for a move down, move up, and then eventually a move towards the downside. And we have the most bullish scenario, a double 1-2 over here, but this wave 2 is getting incredibly long now and is also a lower degree wave 2 compared to the higher degree wave 2. So the probabilities are becoming lower for this scenario if price is going to take the high. If we then look at the probabilities of the different scenarios, then currently in this range over here, the probabilities are higher for the bearish scenarios, where we are looking for a retracement to the downside, where either we look for a retracement directly in a wave Y, or potentially we're then looking for that flat structure in an ABC, so taking the high is no problem, but for now, the probabilities are higher for a bearish scenario, and then of course on place number 2, lower probability, but we always have to keep in mind a potential bullish scenario like the 1-2-1-2. So we observe the reaction if price does take these highs at a given moment, that we observe what happens here and then make our choices and also trade accordingly. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.